This is RoboForex.com's webinar entitled Follow-Up Analysis. We had a little mix-up on Monday with time changes. So the last time I was with you was a week ago, pre-NFP, ECB, etc. Had the direction right about the dollar. I was looking for 97-ish when we were down here on Wednesday. We took advantage of that by the short bearish pound position, short bearish Euro Aussie positions. And then I said the correct thing to do would be to get flat in front of the NFP, and then we had this huge day in the NFP up here to well above my expectations. This has turned into a parabolic run. Let's just look at the positive part of it. There were some people picking the top in the dollar. I was open to it, but I made the point it's not just price, it's how it gets to that price. And you'll see when we get to the breakdown of the individual pairs that what I teach about momentum divergences was not showing up anywhere in the euro, not showing up anywhere in the pound, so there was no reason to bottom pick. Euro pound was still acting pretty negative, still is acting negative, still no divergences. But does that mean you just launch from here and get long the buck? That's hard for me to do as a trader. I just think right now that the risk reward for being long the dollar isn't correct, but it doesn't mean that we short it either. Sometimes the right thing to do is nothing and let the market cycle and set itself up. In fact, I'd use the metaphor. I'm not sure many of you are familiar with the sport of surfing, but the greatest surfers do not try and catch every wave. They too wait for setups, and if there are not setups, they just sit there patiently waiting for the right wave to attack and ride. And if there isn't one, they don't force it. That's how people get injured in both the markets and by waves coming down on top of them. So right now, you can't argue with what's happening. It's becoming parabolic. Normally how moves end when you have this type of action is with a huge reversal day, some type of outside day where we'll start off higher than the previous day, maybe even gap up, and then start trading lower on the day. That's your first sign, and look for an outside candle to put in some type of reversal. A lot of people talking the 105 level. Perhaps that happens, but you can't do anything on the short side of the dollar until we get some type of reversal action. It's interesting, I looked at the RSI here on the daily, and we're at 83, so it took all of this for it to get back to the reading here was 82.80, so just barely surpassed this momentum peak, but if we close up there, even though it's marginal, it still is a confirmed high, correct? So I would expect this market end with a key reversal. I'm not going to try and be Nostradamus and say just short it higher tomorrow, although that could work. I'm just going to be patient. Caught a lot of the long side of the dollar from many different stages that we had here, and the last recommendation was a pound. Of course, the euro paid bigger, but we were there by being short Euro Aussie. Actually went beneath the neckline I'd been talking about for several weeks under the 140 level. We've taken it out. I think there could be a better entry, but was recommending that from the 47 level, the 46 level. So I'm never going to argue with collecting 600-700 pips on a trade, even if I leave 100 pips on the table. And actually the pound went to targets of 52, 51.80 and recently has surpassed it. So here's your dollar index. I was talking about, actually I was right about the S&Ps because I said I thought the S&Ps were going to peak. We've had a pretty dramatic correction here in the S&Ps. I pointed it out up here on a 3 drive to a top formation last week. We finally started getting some negative action. The divergence has integrity. You could count it as 1, 2, 3, 4, 5. So we're getting a 5-wave structure to the downside, which means you can look for some type of 3-wave failure and perhaps some type of rally, but I think any rally in the S&Ps will be sold. I actually thought the dollar might weaken when equities didn't, but instead what it turned into was the strong dollar was just too much. Plus, after the NFP, looks like a done deal about the U.S. Fed tightening by June. That's a market talk, so people starting to profit take. I think it's going to turn out to be much more than profit taking. The next rally will tell you. The yen finally took out last year's high. With all this dollar strength, finally took out last year's high. So last year in the dollar index, here's where we were. And the yen was making new highs. So we've had all this strength in the dollar index, and the yen finally made a new high. I think it's acting toppy here. There are some potential trades here, especially if the S&Ps put in a failing rally. Risk off should come in time. If this is just A or 1, and we're going to get a failing rally for B or 2 with a 3 or C to follow to take us underneath these lows that we made back in January. So accurate forecast, if you trade S&Ps, it was good for about 70 handles. Talked about gold, still doing nothing right. I wasn't in a hurry to buy it. That's why I wasn't going to buy the Aussie, which I correlate fairly close with the gold. Gold's entering some support level, but still really shows me nothing. I was right to advise people to get out here above 1300. Never said I liked it all the way down, so I still don't like it. Can we bounce? We're getting pretty overdone, of course, but this is still negative, and that may portend, although we've made new lows in Aussie, portends even lower lows towards 70 cents in Aussie. The crude oil is reaching some type of critical area. We've been moving sideways for weeks. There's a big debate on, has the crude bottom, or is it going to 30? Some people have been talking 20. In a sideways range, it seems to be rolling over, like there is potential for it to make new lows. To me, I'm also neutral on this. This looks like an awful lot of distribution, so can we wash out in the crude, especially if the dollar keeps running? Higher dollar, lower commodities, that's a possibility. USD CAD is making new highs for the move. A lot of people talking 130 in the CAD as well. So when it comes to the outside markets, I was right about negative action in crude and S&Ps, and I was thinking the crude had bottom. Actually called this $10 rally. Now it's a little bit more neutral. Perhaps we do wash out to new lows. So I'm just going to be alert and stand aside in the crude as well, going into looking for, before I think we get any kind of turn in the crude, I believe we're going to need a turn in the dollar. So they should commence together. So although the dollar's making new highs, crude isn't. I would almost prefer to buy strength back above 53 or 54, showing that the market is good, than just trying to throw a dart here. Give me a Y if you're with me. Tell me if you took advantage of short gold, short Aussie, short S&Ps from last Wednesday's webinar. They were all good trades. Really? Okay, that's great. Congratulations. Okay, and with that, we're going to move to our individual pairs again. I want to show you the case why you don't want to be in a hurry to buy the stuff just yet. And it's kind of getting late in the game, I think, to start shorting this move in the euro. Way overshot my expectations. I was thinking about 107.60 might be it. I was even thinking 109.80, and that didn't hold. And here we are, amazingly, at 105.72. So did not catch the short euro by the euro itself, but did catch a short euro by being short euro Aussie from this breakdown and from this high, talking about euro Aussie getting down to the neckline around this 140 level. We're trying to take out this 140 level. Still a bearish look, but I would prefer to have an opportunity to sell some type of rally, maybe even back towards 44. So you may want to keep a quick piece on. I've been telling you to trail stops all the way down to the neckline. Probably want to have a tight stop above today's highs. We start taking out today's highs, we could generate a rally. But this was a big trade twice from up here and went to the projected neckline, closing underneath it by a shade. But that can happen, right? Because last time, look at this, we closed underneath the neckline and a week later, boom. So I'm looking for rallies to sell because I still think there's a major opportunity for this to trade down towards this 133 level. So we'll be looking for some type of rally, some type of recovery here. We are diverging a bit. Perhaps back towards 43.5 would be a decent entry for this to correct at least this decline from 48.10. So halfway back up around the 43 level will be interesting if we could generate that type of rally. And it may be possible. So this was our home run ball. All right, we had successful trades on the short side of pound dollar, and then the one I said to Mary was up here on a 3 drive to a top formation. Classic divergence. Here we were right before the NFP. I thought we could get to this return line, which was 51.80 at the time to 52.20. So that was still 300-400 pips in the pound in a little more than 3 to 5 trading days. Of course, I was out before the NFP, so I missed this. I did not recommit on the rally. And we are starting to get some divergence in the pound on the 4 hour, but it's under 30. And this action right here in the pound is still confirming the lows. Still too much downside momentum. So we're making new lows here. We're clearing out the lows. So there are support levels underneath this market at, say, 46.30 and then all the way down to 42.30. But I'm not just going to jump on the bear train after catching 2/3 of the move from the high into the NFP. So you're never going to catch the whole move, and the NFP could have gone the other way. Ranges were everywhere from 130 to 300,000 jobs and came in at 280. So I just want to get back to the euro and see how the 4 hour is diverging a little bit, but when you look at the 1 hour, we're finally starting to get a little bit of divergence, but look at where it's at. It's under 30, and it's still under 30. So we can get bounces at any time. I don't want to be short down here. I'm not ready to commit to the long side either. So every once in a while, I'm going to do a webinar where it may seem kind of boring because I don't have a lot of new ideas. But I would rather not have an idea than get into a losing position. Who agrees with me? I'd rather be a little bored and wait for markets to set up than try and entertain myself and get into trades just because I need to trade. If you need to trade, I suggest you go to your next FX Anonymous meeting because it's always easier to learn to be patient than be impulsive and be afraid of missing trades. So if the euro pops from here, that's great. Maybe it'll set up a short for me. If it continues lower, there's still no reason technically for me to want to like this structure on the RSI, on the 1 hour, and even the 4 hour, even though it's diverging. Look at that. I mean, these are terrible readings, 14. So I can't do anything with this market. I'm tempted to bottom pick it, but I'm going to remain disciplined. Same scenario in the pound. Looks like there could be lower levels ahead. Going to probably challenge this low down here. This is how I came up with the 47.65. But you never know. We could get some type of bear market rally. This looks like on the 4 hour, the second drive. This was confirmed. We are diverging here on the 4 hour. So perhaps we get some type of bounce. This is drive 1 confirmed, new lows. not confirmed, get some type of bounce in here, move sideways, and then have a third drive to a bottom that might set up a better line opportunity. But to me, at the minimum, I'd be considering covering shorts here. We may set up something to scalp the long side of pound, but I just don't see it on the 1 hour. There's nothing there for me to do. So right now I'll do nothing. I'm not saying that it can't all change by tomorrow or Friday, but most likely I think it changes Friday, Monday, Tuesday will be opportunities. And we were able to capitalize on the long side of the dollar. We just didn't catch the whole move in the euro. We were there in a couple other instruments. But I want you to keep this in mind, because I've been on the other side of things. It could have been worse if we were short the dollar. Okay, and there were a lot of people trying to bottom pick euro, bottom pick the pound all the way down. That didn't happen to us. So we were aware of the dollar going up. I just was surprised by the magnitude. And that shows you that someone who's been doing it for 40 years can still be surprised by what happens in the market. So you learn to expect everything and anything. And the important thing was being on the right side of it. If you had the urge to short the dollar, like I said, it's not just getting to levels, it's how it gets to levels. And there really were no reasons all the way down in the euro, confirming lows all the way down, confirming lows under 30, no reason. Pound, same thing, confirming lows, trying to diverge under 30, no reasons. So give me a Y if you're with me. I've covered Euro USD and pound dollar. I want to move on to the yen because I was talking about it in our intro. And I see a couple of scenarios potentially happening here in the yen. And what's interesting to me is that it took all of that dollar strength. Here's the yen making new highs back in December of that 21.84. Everyone see that? 21.84. It was a confirmed high. This is not a confirmed high on the weekly. We've taken out all the bulls above it. And if I'm right, after a recovery in the S&Ps and there's another leg down in the S&Ps, I think that could pressure US dollar yen. So I'm looking at a couple of scenarios here. If we get the strength in the S&P back to 2100, 2090, then perhaps we have, this is drive 1, this is drive 2, and we get some type of drive 3 to the upside. You could also make a case that we have a failing rally after this. There was a nice divergence on the 1 hour chart up here. Also on the 4. Well, actually the 4 confirmed, but you had it on the 1. So now I think it might be time to consider top picking in the yen. I think I'd like to see one more high in the yen to above these highs, maybe the 23 level. And the RSI on the 4 hour, should it stay under 70, all we need is like a 50 pip pop, 60 pip pop in the next couple days to possibly have a 3 driver here. I guess we could draw the line and see where it comes in. Here's drive 1 with a confirmed high. Here's drive 2 with a divergent high. And drive 3 would come in up around 22.5, so it's about 100 pips higher. The other way to play it is that we have the high, and this is A, right here, A, and we're going to round out some type of right shoulder here, and you have a neckline that could take you back down towards the 102 level. Either way, either rally up to new highs or breaking this neckline. Here's your formation, call it from 120.60 to 122, 140 under this, is going to give you 19 and a half. 140 under this breakdown line of 21 is going to give you 19 and a half, which is right back to the breakdown about. Here's 120.36 on the 4 hour. And here's 119.65. So potential move there on a failing rally. Give me a Y if you're with me on the euro, on the yen, US dollar yen. So here was another one I talked about a week or so ago, is I thought euro yen had potential for new lows. It was up in here. And then I showed this descending triangle breakdown at the 30 and a half level. $33 and a half right here. I was looking at this action from 3.5 to 6.5. This was the line. And if you missed the breakdown, you had a retest here. I was looking for 30 and a half, which we achieved here, but also said, and the lesson was that this looked like a continuation formation, a bear flag. And I said new lows were possible in euro yen, and here we are. So this was another good call. I mean, if you did it in the levels we were talking about, 35, 36, it was a great trade. And even if you booked it at the descending triangle formation, you had 250, 300 pips. So what have you done for me lately, Dale? What do you do? We're starting to get a little divergence here. Still under 30. 4 hours still under 30. So it's premature. We have some daily divergence, but the market still looks up. So again, I keep coming back to the way these moves end is that one day you're going to have a gap lower opening, and you're going to have it start to reverse to turn higher on the day, and then take out the previous day's high, and you're going to have a bullish engulfing candle. And until you have that, you can't fade it. You might look to get an edge on some of the shorter term work where you have some divergences developing, but I don't see it yet. So the yen crosses still look negative to me. Guppy has had a few failing rallies as well. But my big picture is, although the yen is bullish and maintain this breakout, I'm thinking that there is some vulnerability, at least back down to 2036. Getting back under 120, then you have bigger problems. And also negative on the yen, thinking that the S&Ps had their first wave down, and that on the third wave down, risk is going to come off, and although the bonds have been getting slaughtered, they've really been getting slaughtered. I used to show you guys the TLT a lot. This is one of the reasons why US dollar yen's been strong. Also correlate that to risk on, and risk on means that rates are going up, bonds are going down. But perhaps if we have some type of failure of this rally in the S&Ps, looks like two drives, we might get a pop in the bond market to correct this massive decline. And I believe that's going to pressure US dollar yen on a bond market recovery and an S&P sell-off. Give me a Y if you're with me. So let's take a look at some of the commodity currencies here now. Kiwi finally made a new low. Originally I thought we were going to put in a higher low. We haven't quite taken out this low, although the Canadian has 71.75, but it doesn't look like it's going to be much. But unlike the euro, we're going to have some divergence at new lows. Perhaps we're setting up a second drive to a bottom. Still pretty negative, although we're starting to lose some downside momentum on the 4 hour and the 1-2. So actually, I think that there could be some type of bear market rally in Kiwi and Aussie coming up, although there's still potential for lower levels. The RSI is setting up a little better in these, and I wouldn't expect much more than a bear market rally initially back to about 77 to 77.80, back to this old support in Aussie. But just like the gold, I'm not in a hurry except for quick scalps to trade the long side. And I still need a major reversal day in the dollar before I get serious about putting money at risk, fading the strength of a parabolic move to the upside. Everyone understand that? But they definitely have better structure, RSI structure. Take a look at the 4-hour here on Aussie, and then take a look at the 4-hour on the pound. Actually, the 4-hour on the pound looks better, but the 4-hour on euro, look at this reading compared to the reading in the Aussie, above 30. Euro, 14. Pound, just a shade under 30, and a possible second drive. So euro's still leading the parade lower, and we need reversal days to say, okay, the correction has begun. Here's the guppy, same story. A lot of it to do with starting to look like a head and shoulders top here. Starting to roll over pretty dramatically. We haven't had a new high in the guppy in a while. Still looks negative to me, especially if I get my setup in the end. Perhaps the pound bounces, but the end still could be vulnerable. So guppy's still looking pretty negative to me. I believe I talked about this 85 level being key and that we could roll over. All we did was get back to a gap. So we could have something like this from here that's going to really express a much lower guppy. And I've seen targets in euro yen, just to bring your attention to it on the monthly, that if we start getting through this support level here, we could be headed for 122. So there's still plenty of downside here in the yen crosses. Don't be aggressive to jump on, risk on, and really this whole rally we had in the guppy looks like a retrace. Same on the weekly. Here's your 122 level again. 122.35 is my target for euro yen. Give me a Y if you're with me. So the euro Aussie was a big trade for us. Here's daily here. We're at the neckline. We already have a 2 driver here, so I don't want to be short right now. I want to wait for this market to recycle and give me another shot. Even though we're closing under the neckline, I'm skeptical that we might get something like this, like we had under the neckline here, under the neckline here. If it continues, next stop's about 137. But I'd be a willing seller if we could get a rally back up towards 143, 144 sometime next week. And might even be looking for something counter trend should it set up here in the next several days. We already have the second drive, so if we get a bounce first and then a new low, be aware of a potential 3 drive formation setting up in euro Aussie. I'll give you a number to approximate it, but remember that markets at times will throw over these lines, so we'll see what happens if we could get a bounce and then one more retest down here between 38 and 36.70 for some type of recovery, because this still does measure on the weekly very negatively. You have a 2,700 pip formation from 140, 150, 1,700 pip, excuse me, from 140 gives you eventually the potential for 123 down here. So we'll see if the market sets up and gives us an opportunity to recommit on strength, stay with the trend and play out this descending triangle and head and shoulders top. Any questions on anything I've covered here today? So we're going to wait for key reversals in the dollar index. We're going to be careful about trading the short side of the dollar. We're not going to chase the long side of the dollar. We're going to look for some setups, and we're going to be alert to some type of correction in the yen that can occur after the S&P's put in a failing rally. So keep an eye on where the yen's at should the S&P's get back up to 2090, 2100. If that happens, I suspect a third drive to a top to MS. And here's your breakdown line for a correction to continue right under 121. Any questions on any of the pairs that I've covered? We don't want to give up our 300 pips or so from our short in the pound just because we missed some of the action from here, 52. So we left 180 pips on the table. If you didn't and you took it through the NFP to be a hero, you were a hero. Congratulations. And we don't want to give it back in Euro Aussie, which we were shorting from up here, and then again here on the wedge breakdown. But I'm a very willing seller if I get a reaction back about 300-400 points in Euro Aussie. And with that, I'm going to wish everyone a great weekend. Hope you were able to take advantage of dollar strength. If you were listening to me, there was no way you were short the dollar going into the NFP. You were booking dollar longs going into the NFP. You weren't top picking the dollar going into it. So look forward to these markets resetting into the next 72 hours, and I'll be back with you on Monday. Have a great weekend, and congratulations on your short side profits in Euro Aussie and pound dollar. We'll see what we could come up with after we recycle and get some setups into early next week. Thank you for your attention. Good hunting, everybody.